Hey everybody, hey traders, Chris Pulver here. Happy Wednesday. It's just after 3 o'clock, time for the final hour. Let's get cracking. We had a pretty choppy day today, which is totally fine. Worked out nicely for daily profit play. And I've got a trade that I'll be managing towards close or not doing anything because it should be fully profitable. I have a little profit trap on a broken wing butterfly. That is SPX, and I'm looking to see if price will stay above 58.55. That is my pin price. So technically, if it just stays where it is, I collect a full income on the credit initially. So the trade looks like this. I've got a live feed of it right here. So this is the trade. Initially, when I took the trade, it looked a little bit different because this had a credit. So I collected the credit here initially for 45 cents per contract. There is a $545 max profit, and that's if I pin price today at 5855, which is probably not going to happen unless we're going to get a severe drop by 50, 60 points in the last 56 minutes of trading. Very unlikely. If I go to my, let me put this guy back there. If I go to the expected move based on Tasty platform, go into SPX, take a look at the live trade. There's the position right there. And the expected move is maybe to the low end of 5,900 to the up end of 5,920. So we're looking at maybe 10 points by the end of the hour. So highest probability is we're just going to keep the full 40 to 45 cents. Did anybody, if I've got anybody watching for, give me a second here, daily profit play in the service, did anybody take that trade with me and get filled at a similar price? Custom give. Okay. Papa John's here. Cryodex here. Anyway, so it's looking good. I'm just going to let it expire for full profit. If price does end up falling, then I've got a profit trap there to get that peak. That would be an awesome win, but that wasn't really the intention. I was just trying to make some extra income on the day. So SPX going 2 for 2 is always a good day. And hopefully, I mean, we've got to be, for some of the other trades I have on for daily profit play, we've got to be getting close to some of these hitting for some profit. So SPY, let me look at some of the accounts today. What did I do on the portfolio? I closed out for profit on EETH. I rolled it's a cash secured put on JNJ. I actually bought shares of Walmart and I put a collar trade on. I did a silver trade, silver futures trade, which I kind of like. That's going to be like $300, $300 income. And I'm trying to think. Yeah, it's $300 income, something like that. Microsoft did a 1-1-1. Amazon did a ratio spread. Did I not? Oh, wait, hang on. Let me get a Microsoft for everybody. Microsoft. Yes. Okay, so Amazon today. Microsoft today. Silver Futures today. Walmart today. Johnson & Johnson today. What on earth is this? Oh, I was like, I bought the shares and then I put on the collar trade. So it looks like I had 2 trades, but I just added options to the core position. Okay, so pretty busy day. 70 trades on the day. I'd say that's somewhat active. And yeah, hopefully SPX will stay. I want to take a look at some of the trades I have running for daily profit play. That's the broken wing butterfly and SPX. Let me just go to the SPY here. So looking at profit there. Let's see. We've got to be getting close. That's a trade I took on for today. Some waterfall income trades still need some love. I need to see if the S&P will get over 600 or the SPY gets over 600 to help those positions out. Some of my got to be getting close on profit on the synthetic strangles that we were doing on the SPY for daily profit play. I need like another 10 cents decay on those. This one is it's about break even. This one's upside down. All my SPY trades in the 600s. We need a little love. I did find an interesting snapshot here. I shared this in an earlier session today. So the 1-year seasonal pattern does not look overly bullish for the first quarter. Although we typically see like order flows are relatively stable, we might just see a lot of indecision. We might not get like a big flush down in the markets, um, but it's year one is not super awesome. You do see that if history is going to be the trend now, this is what I like about this image. Going back to 1949, if you basically just kind of bought in March, you're looking at a pretty decent chance to get gains for the year. So again, this is like an aggregate, would that be 74 years of trading? And if you bought in March, or you're just kind of looking to see if there's a Q1 pullback, if there's a Q1 pullback, I mean, whatever dip we get, if we get like a decent, like 5% correction, 10% correction, that'd be pretty awesome. But I kind of like the whatever dip we have, see if it sets us up for success to carry this into, positive gains by the end of the year. Maybe it's not that straightforward. Maybe the year starts out differently. Who knows? But 70 years, it can be wrong, but 70 years shows a lot of data where this is kind of a nice way to consider what would be easier to trade this year. Wait for a correction, be patient in Q1, look for some good opportunities and pounce when you have them. And if we have a dip also in October, another good spot to have some cash at the ready for some opportunistic trades. So, all right, what else we got going on here? Papa Johnny got filled with 45 cents. Very nice. Alpha, nice to see you here. Aaron. Oh, Aaron, what's up, dude? I know. Aaron P. Yeah. I was like, I know that name. It's like I've got private messages in Discord. It's been a while since we did that one-on-one, dude. How's everything going, man? You had some profits in your Forex trades, hopefully. Carlos says, took the XPX 0 DT, same as you, gain 20.24, 2+% after commission. Okay. Did you already close it out, Carlo? Are you still in the trade? Did you close it out, or are you still in the trade? I should be doing, so 45 cents, and I'm going to pay 60 cents times 4. So 240 out of the 45 cents. Oops. So 45 minus 2.40. So I should net 42.60 a contract on my SPX trade that I'm taking towards the next 50 minutes. I'm, again, pretty confident. Nothing I have to do to manage it. It's going to cash settle. I was kind of hoping. The reason I took that trade at the level that I did, I could have gone after more profit or premium, but I would have to have flirted with the lows right here. So I think if I looked at these lows around 58.80, so initially I was looking at, okay, if I buy, so put a +1 at 58.80, and then a -2 at the 58.75, and then a +1 at the 58.65. So if I did that with the broken wing, it would still have the risk. It'd be defined risk, but it'd still be risk. And then go up into my profit trap, and then I'd have my bigger credit, and it'd look something like that. So that would have been about $1 to $1.50. But again, when we were sitting down near these lows, I was like, well, there's still some liquidity levels that the market may be searching. We did take out this even low. So I was like, well, if it taps the lows and goes lower for the session, then I didn't want to be flirting with like any of the lows getting tested and exceeded. So I went, a little bit out of the money. Anytime I can get, 50 cents is kind of my idea. So like if I get 50 cents that I can keep it with a high probability of winning by the end of the day, I'll typically take that as a day trade. But the profit trap would have offered up, obviously a really nice win. If price were to fall back into this and get into the profit trap, then I turn, I don't know, it's potentially like a $300, $400, $500 winner. And that's obviously nice, but that's rare and hard to get, especially when you're trading, later in the day. All right. Would rather have the 45 cents nailed versus maybe. I agree. Yep, but it is defined risk. I mean, I was willing to take. I think my max loss would have been about $9, 9 and change, like 9.55 would be my max loss. But I'm going to take the 45 cents. So yeah, I mean, it's not favorable reward to risk. The profit trap is there to hopefully protect a little bit late in the day, especially. But it's fine. And if we get a big fat surprise where this wants to like sell off towards the end of the day, well, I still have a level at 5855. So during the session, if we're watching this market drop and we want to take out the lows of the day, this might end up coming back down to a level that becomes really, really profitable. But if it just stays where it is, post FOMC minutes and the afternoon finishes pretty quiet, then we're just going to hang out here around 5,900, which was actually one of my larger liquidity levels for the day. And we're just kind of hanging out right there. So anyway, that's that. Where are we for the week? The week is still negative based on the big gap up Monday and just got faded hard the entire week. We still haven't done any major technical damage. So I keep telling traders when I'm doing my live sessions, watching that PCE low, watching the retest of that same low during the holidays. This was our FOMC breakdown. There's a resistance there. We came just shy of that. So I still, until price breaks below here, okay, or price breaks above here, I think that this market is going to be churning with a lot of noise in here, and that's okay, right? There's a lot to be wondering, like, can this market go higher? Is this market going to go sideways? I don't know. So at some point, price is going to break, and it'll go higher or lower, and we'll figure it out. I would be believing probably the higher probability as price would be willing to go lower first. I hope it is, because there'd be the dips and the discounts that I want to buy. But I don't know. Maybe Trump takes office and says all the right things and earnings comes in super strong and the market's like, hey, I guess things are getting better. But there was a big fake out this week on Nvidia, right? We tapped the all-time high. Everyone is all geeked out and excited and super bullish, and it's just like a monster fake out. So I still have Nvidia. I've got a collar trade at 140 by 130, and I will watch it. So the trade has dropped. I'm actually up. I'm up like $4 or $5 in my long put right now that I'm not going to protect. I'm just going to ride this thing out towards the expiration in March. And the reason why I'm doing that is because if this is going to be a fake out trade and it starts working its way back down to the same lows again or down towards this 200 moving average, I want that 130 long put to offer some additional profit. So I want to use that to my advantage to lower my cost basis. And that's why I own the shares, sell a call, buy a put. It's a collar trade. It's super boring. It's essentially a free hedge that protects me to the downside, but also get the stock called away. I'm doing this for income. If I'm speculating, I'm trying to say Nvidia is going to go to $200, $300. I'm not saying that. I'm trying to make this trade work out where it's like I can flip this thing for like $5 or $10 a share. It's pretty simple. Doing it on MicroStrategy. I'm looking to do it on Walmart, which is way less volatile, but it's to me, it's one of my more defensive plays for 2025. I think the consumer is going to be tested. I think that Walmart demographic especially is going to be like the kind of the bottom 90% socioeconomically, and that's the demographic that's struggling. That's what feels like a recession is most of the country. And so Walmart might feel the pinch. They might feel that their demand is down. They might feel that customers are unhappy or they're spending less. So Walmart could, and it's had a great run. Like Walmart was up a ton, right? So if I go to Walmart, how did it do the last couple of years? I mean, the last year's performance was probably one of the best they've ever seen. Like, I mean, it was up 74% in the last year. That's wildly profitable for Walmart. That rarely happens. Wow. Anyway, it was just a massive bull trend last year. Pretty simple. So anyway, I bought the shares, I put a collar on it, and I'm going out to March. We have earnings in February. If earnings go back up to all-time highs, I get it called away. I'll make about $1,000. If it goes down, I lower the cost basis. I want to own Walmart in the 70s. Okay, so I'm working the cost basis down if I can. This is currently my break even. All right, let me get some questions here. If you had set up the broken wing butterfly earlier, better premium, more risk? Not more risk, but better premium. It'd be better premium if I kept it 10 wide. So if I did a setup like this, let me bring the chart back up. So had I set up the trade, here we go. So if I set the trade up, let's say timing wise, if I set the trade up off of this low, and with my software here, I was watching like these are liquidity levels that I expected the market to bounce off of. I didn't really have a lot of direction to them today. They were already there. Price was pretty much opening at these liquidity levels. And so I was looking at these as these are market maker levels to be defending. And so, I mean, it was an interesting like rally up for the morning and then a fall back down to fresh lows and then back up again. The day itself is very choppy. That is more common than not. But point is to Papa John's question, I would say if I put in a broken wing butterfly right there, I would have it would have been a trade like this. If I believe like this was going to be the low for the day or something close to it, then I would Buy, it'd be a +1 at 58.75, and then a -2 at 58.70, and then a +1 at 58.60. So this is a 5 wide, and this is a 10 wide, which creates the broken wing look. So that's why the broken wing looks like that. So you can keep credit on the trade. So you get credit on the trade when you place it. Then you have a profit trap at the end of the day. If you're doing a 0 DT or whatever expiration is, you get the profit trap up here, and then you're taking on the risk if price is falling basically below my pin price. So we have a little bit of profit trap, on the far side of the pin price, but it's only like 5 or 10 points past that if I'm doing this type of broken wing or skip strike. Okay. Arthur says Walmart eggs went from $5 to $10. Oh my God, that's ridiculous. I have not been to the grocery store in a while. I just have not bought eggs in a long time for that reason. I know they've been making headlines. Let me see what we have for the cost of eggs right now. What's the national average? National average egg price. I wonder if this actually is in. That's $3.65 a dozen. Let's go egg price. Egg dog. Who wants to trade egg dog? Let's see here. Eggs grade A, large per dozen, U.S. city average. Here you go. See, Trading View has all this good stuff. Boom. 365 national average. It's being tied to bird flu, right? So we had egg prices surging in late 2022, mid to late 2022 into peak in January 2023. Gave most of that back into this last summer. This would have been August 2023. We've essentially been going hot for the entire year 2024. Not back up to these crazy, post-pandemic levels, but still not cheap. Not cheap. Eggs will be the new currency. Pasadena, Altadena fires also. Yeah, I saw my buddy lives in San Diego. We were texting about that yesterday to make sure he was okay. Man, I spent like a week in California and a fishing trip in the northern part, like Weaverton area. And we drove through like one of the, I don't remember what they called it. I think it was like called a car park fire or something like that. Or it's like a straight up like intentional arson. And it was like 150,000 acres that by the time I left in like 3 or 4 days, that 150,000 acres had spread to like almost 300,000 acres. Like the amount of damage and wildfires in California is just staggering. Crazy. I think that was in Chico, I think. Anyway, I digress. Eggs, the incredible edible egg. S&P still stuck between these two levels that I noted on Monday. Qs still stuck between the levels I noted on Monday. RSP is equal weighted, still kind of basing around the 200 moving average. This would be a good setup, in my opinion. I do have some dollar cost average trades on the RSP because this did drop nicely. Let me do this. Because this dropped nicely, high, low. If this were to do like a little bit of a fake out trade to the downside, I'd like to see if RSP can offer a nice little dip. Two ways that I would kind of time this trade would be if it hits the 200 moving average. Also, if I looked at the S&P that I have in my watch list, how many stocks in the S&P are above the 50 moving average? And if that number going down to like 11% or 10%, I'm probably just going to look at buying additional RSP or buying the SPY. Probably, I mean, RSP. You got to think. I mean, let me do this. Let me do a comparison. Let's open up a new chart. Okay, so I'm going to open up RSP, put this in a line graph, and compare this to. Let's go for the last. Let's go since the bottom in October 2022. Okay, so bottom of October 2022. There. So from that bottom to this high, we had a 47% rally in the equal weighted, and we had about a 75% rally in the S&P. So the SPY outpaced equal weighted by a pretty decent margin. I wonder, based on this recent decline, if we have another kind of convergence where the SPY might fade and the equal weighted gets a little bit stronger, or is it the other way around where the equal weight has been dropping enough that it's going to drag the S&P down with it? So a lot of traders look at this as like, well, the SPY is up here and the RSP is down here. Like this means it's going to go up and that goes down. Not necessarily. What might happen is this is already down. This is where the SPY is at. Perhaps this drags the SPY with it. And maybe it goes faster because there's more room to kind of play and catch up and get realigned, right? So if I compare this to SPX, or I guess SPY would be fine, SPY, and use the same low. So this, from low to high, 71 to 72%, and this was 47%, right? So how far are we off of these all-time highs? I think we're less than 5%. I think we're less than 5% on the S&P. So all-time highs right now, we're playing with a range about 3.5%. So we're less than 4% away from all-time highs, while the equal weight has had about a 7% correction. Okay. So still, is there enough to stay resilient in the market, or is something going to get worse? You know, I like the pullback. I don't know if this gets like nastier, but if this was a high, low, lower, high, lower, low, I mean, we might have a bigger flush coming, but if it's high, low, a pullback into here, like, does that get faded for a deeper correction? Do we come back and find some technical levels in here first? If all we did was take this low to high, I mean, do we pull back to some fib levels? I mean, any of these can happen. So a 30% check or a 38% check, I'm going to watch these levels pretty closely. All right, so comparison one, I don't need that anymore. Let's go to this one. We've got 35 minutes left. Okay. Let's see. All right, everyone's talking about insurance and weather. I took a trade on the Russell today. I did IWM. I was looking at Russell futures, but didn't want the risk, even though the income would have been a little bit better. But I'm willing to own the underlying here. So this is the trade that I took on IWM today. I was looking at RTY for an income trade, but there's just way too much risk if anything happened volatility-wise, so I avoided that. VIX, a little bit of a retreat today. VIX is down 1%. It was up like 3 or 4% earlier. 15 is, we'll say, adequate. 15 to 20 is adequate. That's kind of the norm for volatility. Anything over 20 or 25 is considered higher. Anything in the 30s considered pretty high. Anything in the low teens or double digits like 10 or 11 or 12, extremely low volatility. So I would be expecting this to kind of stay here unless the market gets a little bit antsy about something worse, right? So if next week's a good example. Next week we have inflation news coming out of the U.S. I think that's something that you don't want to ignore. Let's go Edge Finder. Oops. And I was doing the live streams with Nick and the team today, and they added inflation data. So we have inflation CPI, we have core PCE. Let me see if I can go back a little bit farther here. So what I want to look at here is basically the trend. Okay. So PCE from the peak during 2021, 2022, the trend has been lower. Okay. However, it's not trending lower any further. This is now sticky. So we are sideways here. In fact, the core PCE has gone higher than last. This would have been, I guess, by like February, March, April of 2024. It's back to the same levels. So that was like your slight uptick. We saw a bottom in inflation, like we saw a bottom in the 10-year yield. We saw a bottom in a bottom in that pretty much all yields, like short-term and so your 2-year, your 10-year, all bottomed out hard in September, and then your bonds have been dropping steadily since then, doing the exact opposite of what the Fed did. I want to say I took pictures of this. It was like the Kobesi letter. Did I take a picture of that? Let me see if I can find it. It was on Twitter yesterday. Let's go here. All right. What's that? Top 10, I get rid of that. Top 10, get rid of that. Okay, let's go to Twitter. And yep, the Kobesi letter. I don't know if that's pronounced right. All right, I follow this. They were doing a thread performance report. So here is 12-month forward EPS of the Magnificent Seven and the S&P equal weight. Again, is this enough to let the Mag 7 finally rotate out and not look as attractive, or is this going to help bring the equal weight higher? I don't know. Let's see here. 30-year interest rates are now lower in China than Japan. Wow. That's crazy. So we've got stickier inflation in the U.S. We've got China facing deflation. Stocks swinging like the market and pick a direction. That's pretty obvious. Oil prices rising like the recession has been avoided until they are getting depleted a little bit. Like oil prices are fading today. Gold price is still rising. They're pretty well supported off that 100 moving average. Treasury yield still rising. Yep, like we've got higher inflation. Deflation worsens in China. I'm looking for this. Gold prices, Fed pivot. Let me see what this said here. Come on, man. I found it yesterday. Read it yesterday. Freaking, where is it? Let's see. This is it. I think this is it. Yeah, this is okay. I found it. So the 10-year note is nearing 4.7. Mortgage rates on their way to 8+%. That sucks. We're trading at like 6.9 right now on the average 30-year mortgage. I really don't want to see it above 7. That's going to be pretty messy. That's going to be a freeze in the housing market. Not that there already isn't one, but it's going to get worse if we start seeing mortgages continue to go up. So right now the 30-year is trading at 6.91. That's your average. I mean, we peaked out around I mean, I can't imagine like having to close on a house at freaking 8%. That's going to be brutal with the housing prices. So there's that. This is what I thought was interesting. Since the Fed pivot began in September, okay, September of 2024, interest rates are up more than 100 basis points. So yields are up, almost the exact opposite of what the Fed has been cutting. This has never happened. So here's the thread. The Fed cuts began September 18th. Meanwhile, the 10-year note is up 110 plus basis points. It's pretty much the exact opposite of the Fed cut. In almost all instances, other than 1998, interest rates fall. Interest rates fall when the Fed cuts rates. It hasn't happened, right? So this is similar to what we saw back in the dot-com bubble. So that'd be like your run up in 1998, 1999, right in here. You're seeing like the little run up. 10-year yield before the first Fed cut, running up before it starts to fall. Fed starts cutting. There's a rat. So this is this is the first time that we've ever seen like the complete opposite of the Fed cuts, and the market's like, meh, we're going the opposite way. So bond markets are pricing in some very, very different things than what the Fed is trying to tell the market. Here's this thing too. 10-year yield before the Fed and after the first cut. There's the current cycle. This is where we're at. Averages in the past. This is a good visual to have. So usually we see yields dropping over the last 30, 40 years. And this is our current move up. So obviously nowhere close to the average. So, I mean, does something break? Right? Does something break? Maybe. I would like to think that I mean, I don't know when, but it'd be nice to see that the yields will actually top out and start to retreat a little bit. But something tells me that doesn't happen until this gets like so painful and so obvious that all of a sudden we start dropping. Like it's going to potentially break the market before it gets better. And that's my biggest concern in 2025 right now. It could be elsewhere. I've got other stuff that, maybe it's something I'm not talking about, but this to me is like front and center of one of the most painful things for the consumer, for businesses, for borrowing, for debt restructuring, for financing, for all these things that we operate in. We are a service and tech and debt country, and this will affect all these things. If businesses can't borrow cheap enough, if people can't finance debt cheap enough, if people can't, keep a cash runway or debt runway cheap enough, if people can't move into homes, if people, it's like you're freezing out, and you're basically pricing out like all borrowing, or you're making it so expensive that people are going to have freaking bankruptcies. So anyway, that's my concern. Um, so effectively, the markets are fighting the Fed. Yep, we've seen that. We've seen gold stay pretty resilient, with the dollar also going higher. So anyway, read that yesterday, thought it was interesting. PCE, I'm glad they added this in with Edgefinder. And here is our CPI data year over year. So we, pivoted hard back in September, went a little bit lower, then trended higher the last couple of prints. PCE, we've been the same level. We're starting to trend a little bit higher. I keep looking at that Trueflation reading for third party. It's just good to see there's more than just like, yeah, what's the Fed say once a month? This actually is encouraging. If this trend were to continue going lower, that's good. But my concern is that this is a pause and this gets higher. That's not good. That's going to put a lot of pressure on growth. Okay. So we'll see. Daily profit play today danced around the debit for 30 minutes. Which level? Did it dance around the stop loss? Or dance around your take profit for 30 minutes before it actually closed? It got a little exciting from that. I was out of the trade pretty early. Like once we had that drop at 10:10. I'm trying to think when I wrapped up class today. That 10:10 drop and then came right back. It would have probably taken until like 10:15 or 10:20 this morning. But that little move around like 11:50 a.m. into 12:30, so that like 30 to 45-minute window there. Oh, the take profit. Gotcha. Okay, take profit. Yeah, that's cool. All right. What else are we going to look at? Junk bonds, just kind of the credit spread liquidity. There is going to be some spend down in 2025. There's going to be less monetary policy available. I think fiscal will still be consistent, but monetary is still shrinking. China, Shania Twain said it best. They don't impress me much. We're not really doing anything great on China. I'm still in it. I still have some ownership. It's only Alibaba, Baidu, and JD, but I'm still working aggressively my costs lower, trying to. And hopefully we see. I think March. If we don't know anything now, like by March of 2025, we're going to find out how much stimulus and how serious is China about keeping their economy moving. I mean, they're talking about deflationary spirals. China's been pretty much pegged as uninvestable for the last 12 to 24 months. I still think that there are technical reasons to be long China, valuation wise, on some of their bigger stocks that are ADRs. So your American depository receipts, where you can do a U.S. trader can trade Chinese stocks through an ADR. That's Alibaba, that's Baidu, that's JD, that's KWeb, that's like not KWeb. KWeb's an ETF. But these individual stocks, if I can trade them, I still like the upside technically. I just don't know if we have to come back in to find major support first, and if we do, that's okay. I will wait and I'll be patient. But man, it would be nice to get in a. I'd love to be like synthetically long on Baidu, so I don't have to necessarily buy the shares outright, but it'd be nice to be like long with a synthetic trade. You can do that through like a Zebra, which is you buy a 70 delta call and then you sell the 50 delta call. You can do that after you buy a call and then sell a put at the same level. That's like being synthetically long in the stock. There's all sorts of ways to do it, but anyway, I'm thinking I'd rather do that with options, and I just have to carve out a good time window that I'm comfortable with. Some Schwab ETFs. This one is going to be like trading the equal weighted. It's a little bit more diversified. I think the dividend equity, let me see how many SCHD number of holdings. I don't think it has 500. Maybe it does. Holdings. Let's see. So it has 103 holdings for the SEHD. SEHG, I think, has like 230. So SEHG is growth and SEHG is dividend. Again, I'm not saying this has to bounce off of the 200 moving average. It'd be kind of nice if it does, but I'll wait. It's cheap enough. That's why I bought it. I mean, I bought this thing at like 28 bucks. So I'm barely upside down on it. I'll dollar cost average into it. If I get a massive discount, then I'm buying this thing probably at like $23. So I bought some at 28. I'm looking to buy more at 23. If this goes higher all by itself, great. If it goes nowhere but sideways and I can just collect my, 3 to 4% dividend, that's fine too. Okay. Were you trading oil when it went negative in 2020? I was. Yep. I was trading. I traded everything in 2020, and you pretty much couldn't lose. If you had capital to deploy and the willingness to be bullish on anything, it was pretty hard to lose money. So I went USO and I went long CL, like futures contract. I traded a bunch of credit spreads and debit spreads on CL. I traded USO pretty much back into positive territory for like a 6-month window, and it was pretty profitable. So, yep, I've traded. I mean, I've been pretty much day in day out of these markets for the last 14 years. Passively around the market since 2000. But yeah, I think I look. I think the last 6 years have been insane. 2018 to now. I mean, I'm going to draw it from memory here, and I'm going to do a comparison. But 2017 looked like this. 2017 looks like this. 2018 looks like this. Comes back up in 2018 again. Crashes back down during 2019. Comes back up here in 2019 to 2020. Crashes during COVID. Okay. Comes back up here post-COVID. Falls in 2022. And then we pick back up here in 2022 to 2023 into 2024. We had a hiccup in April. Can't even draw it. But the last 6 years of volatility have been absolutely crazy. And my concern is that now that we've caught a nice trend, that there's just a lot of potential correction territory if things get really bad. So it doesn't have to happen, but I think that we have literally been operating in booms and busts since 2018. So yes, I've been in the markets for a long time, but I think anybody that's been trading since 2018 and has survived and actually carved out some profit over those 6 years, I think you've had a very I'm not going to say exciting. I'm going to say like a very intense, like welcome to trading, to experience. But the downside is you're now conditioned in 6 years to just buy the dip. And, you haven't experienced a 2008. You haven't experienced a meltdown in .com. I mean, I was listening to a Tasty Trade session or YouTube video, and they were talking. I mean, I know Tom Sosnoff and Tony and the whole team at Tasty, like all those guys have been in the markets forever, like 30, 40 years. When they were talking about, pre-market, post-market, anything that had .com in it that would open up in 1999, 2000, it opened up like $50 to $100 higher. Like imagine GameStop in 2021 with all the craziness. Imagine that on hundreds of stocks during the .com bubble. Like that's like the wildest time I've ever seen the markets. 2008 was there's nowhere to hide. This is the brink of financial Armageddon, and basically it took the whole world to come together to put out stimulus and figure out how to solve it. COVID was that faster, but to an extreme, because the money that we dumped in COVID was like 5 or 10x what we dumped into 2008. Right? Like the US did a $700 billion bailout program and people were up in arms and like, there's no way. We did like a $6 trillion bailout program since 2020. That's how much stimulus we added. It's like the numbers now are just off the charts. So anyway, there will be good times and bad times. I think 2025 is going to be challenging. I'm not saying it's bearish. I think it's just going to be a grind, but that's probably where I do my best, because I'm always willing to trade. I'm always willing to figure it out. I stay pretty objective. I keep cash at the ready. I'm trying not to be overinvested, and that might be my biggest asset this year, is just being opportunistic and hoping to be patient. I don't want to think that I have to chase things. I don't know. I'll give myself lots of margin for error. All right. So we've got a few minutes here. I don't think I'm going to stick around till 4 p.m. I think I'm good on the SPX trade. It's likely going to stay above my 58.60 level. We'd have to have like a massive drop here. We'd have to drop 48 points in the last 15, 20 minutes. Like that's not going to happen. Shouldn't happen. Never say never, but it's probably not going to happen. All right, comparison there. Anything on the futures market this morning? I didn't take a look. There's my support level. We had a little bit of chop today in the futures market. Oh my gosh, totally choppy. How'd my boy Daniel do today? I didn't see Daniel post in futures today. Usually he's posting like, yeah, I'm up $700 today, $800 today, $1,000 today, just crushing it every single day. This was where's the 930? Right there. Ugh, that is just awful trading today. 930 candle. Right there. Okay, that is Chop City on the S&P futures, and it's probably not much better in the NASDAQ futures. There's 10, there's 930. Wow, just a big, ugly green candle that essentially went nowhere today. So a pure directionless day. I mean, futures went nowhere. S&P went nowhere. I mean, this is where the day started, right? This is where the day started. This is where the day is finishing. That is a zero-sum gain on the day. We'll work in what environment? Work in what environment? The what? GameStop environment? The dot-com bubble environment? I mean, yes. If it's because you're not exposed to like the overnight craziness. Like if you're holding days for longer expirations, then yeah. But all that stuff is kind of built in. So unless stocks are going like 3, 4, 5 standard deviations, which is like the 0.00000001, right? Does anybody know what the Black Monday crash was in 1987? There was like a 0.0000000001% chance of that. It was like a 20 standard deviation move, but it happened. So, I mean, the important thing with anything, Papa John, like anything that we trade like daily profit play, it's always defined risk. So that's the most important thing, because if the market is just absolutely bananas, we still have defined risk. So even taking a loss, it's like it's a day and it's a loss, and we go trade the next day, right? So to that point, like, yeah, worst case scenario is like we get beat up for a little stretch, but then things like stabilize. But right now it's like we're seeing a lot of days and this is really since the creation of like the 0-day indexes. So since summer 2022, the 0-day indexes are really, really stabilizing the market. So I think that's a good thing. It's added a lot of extra liquidity, a lot of extra volume, a lot of short-term hedging for all the big pockets. And I think that's also why we haven't seen a lot of 4, 5, 6% days. Intraday, we see a lot of 0.5s, a lot of 0.5s, a lot of 0.25s, a lot of fractions of 1% movers for the day. I listened to an interesting study yesterday. It was Tom Sosnoff of the Tasty team again. They dove into intraday movement versus overnight movement, and they found out that if you go back to like 1990, it makes it seem like all the overnight moves are crazy aggressive, and that's where all the movement is. But if you compare it to 2008 to now, from 2008 to now, the markets are essentially identical. From 2008 to now, the markets are virtually doing the exact same thing, whether you're overnight or you are intraday. Like the day-to-day movement is essentially the same. In fact, overnight is giving you a little bit less movement than intraday, which I thought was interesting. So, because I've seen some things floating around where it's like, overnight is the best way to trade it. I mean, if you're trading a duration, like, yeah, you want to take advantage of overnight moves. But if you're looking for day-to-day trades, overnight doesn't really do anything. Like day-to-day is totally fine. So, cool. All right. I think I'm going to wrap it up there for today. We got a Newsom statement on wildfires. Citizens get vaccinated, boost against COVID-19. What? Please don't tell me that just happened. Wildfires, by the way, get your COVID vaccine. Silly. I don't know. It's on Twitter, so everything's a grain of salt there. All right, SPX looking good to close. Super choppy day in futures. Tomorrow the markets are closed with the Jimmy Carter Memorial. I told traders in my daily profit play service we'll still have a live session. Let's just talk shop. We can kick around some studies. I'm trying to think. Maybe we'll pull out the back testing software again. We'll go in and we'll gut up a couple of the different tests and studies. So let's jump in and do that tomorrow during our session. So we'll have about probably 45 minutes to do that. And if I find any stocks that I like, I'll still be throwing out trades. There's nothing to trade. There's nothing to trade. And even on like Friday, I mean, I don't know if we're going to gap from Thursday to Friday. Maybe we do, maybe we don't. Maybe futures comes alive. I'll be paying attention to it. But today, like extremely choppy. Where we are finishing for the week is still, it's a down week so far, but nothing against the PCE low and the holiday test and the post FOMC retest. So resistance is here, support is here. Price is going to have to figure out where to go. So we might have to tolerate this for another week or two. We might tolerate this through inflation news next week. We might tolerate this through the inauguration with Trump. I don't know, but could be an interesting time. Just remember this little piece. Should I manage out or let them expire? If you're in SPX, I'm just going to let it expire. That thing can cash settle. I'll get the full 45 cents credit. I'm not going to touch it. It's fine. I'll let it cash settle. What else for today? Oh, this one little image to kind of keep in mind. So I thought this was interesting since the average over the last like 30, 40 years is when the Fed cuts, the rates go down. That didn't happen this time. Why? I don't know. Markets pricing in higher inflation. This is the thing I want to walk you away with. The first year after an election with the party that's losing, that's in red. So it shows like maybe a little bit more disruption to kick things off in Q1. But for the most part, if we have a Q1 retracement, okay, a dip in Q1 would be seen as a buying opportunity. A dip going into the Q4 rally and the Santa rally into the end of the year. I mean, so again, if you're just patient, let's just see how this plays out. We'll come back and reference this. I'll save this image. But if we reference this, it's like, okay, look for an opportunity to buy a Q1 dip and then look for like a September, October bottom. Okay, so we look for a strong Q4 and we look for a little pullback in Q3. So that would be like August to September, maybe a correction. Okay, so we'll see. All right, SPY and QQQ. I'm just hanging on to them, man. Like if you're in the longer duration ones, I'm just letting those work. Like we want more time decay on those. We need another. I mean, this actually is good because going into Friday when we come back to the markets, if Friday is still really choppy and we can get through like another 2 days, like that might be enough for me to get another 5 or 10 cents credit on my SPY and Q trades for daily profit play, and they might close us out on Friday for profit, maybe. Well, I hope so. So, because this is the right environment, man. I mean, we're trading sideways, price is cooperating. We just need to see that time decay working in our favor. So we're not quite at the kind of the halfway point. We're not quite there yet. So we don't have like that 75% of the typical gains in the theta curve or the time decay, but we're hopefully going to be getting there faster because price has been so cooperative. Oh, you're talking waterfall. All right. Waterfall, we got to ride those out, dude. Like end of January, right? We've got end of January, end of February. The best thing for us to have happen in the markets would be that this thing can come back up and revisit highs. If we come back to these highs or close to these highs, anything that's in like the 600 or if I've got greater than 600 on my SPY trade, a break even or better, or a very, very small loss, we'll consider managing. 11 years of that strategy, you don't have to manage anything. Like honestly, like if I lose, I lose. Like that's 11 years. I trust the data. I've done it up, down, sideways. But for me personally, it's like I don't like to lose. And if I can mitigate that loss and not worry about it and have these trades all be winners, then I'd rather do that. So if we have any upside potential, closing out the ones that we did near all-time highs at break even or close to it would be great. And then managing these as winners or letting them go up to profit would be great. So I'll keep an eye on that one. I'll keep an eye on it. We still have some time in those trades though. Okay, my SPY trades and Q trades. So I've got until the 31st. Yeah, so we have the 31st and we have, so I have one here on the SPY for the 24th. So that's still like 2 weeks away, right? That's still a couple weeks out. So we got time. If the market wants to go up, it'll be close. But that's my earliest expiration on the SPY is a January 24th for I need price to go up. If it gets there, cool. If it doesn't, I'll either manage a partial or I'll keep an eye on it. Right now, it's trading for around 92 cents. My full loss is $1. So I can either save myself 14 cents and close it out now and book the loss, or I can give it a chance and see for the extra 10 cents of risk, is there any chance that this market can get back up towards 600? If it can, then this will get smaller and smaller. I may not recover my entire trade, but I can take a smaller loss. And so I'm just going to give it a chance. I've already embraced this much risk. I might as well take the other 10 cents of heat and see if I can get it to come back into a better position. Yep. All right. Sounds good. Okay. I'll let you go. Good stuff for the day. And let's do it again tomorrow. All right. See you. Bye. Kindly hit that thumbs up button for me. Nice to see a good little crowd today talking amongst yourselves. And let's keep the channel growing. Let's see this year. Let's go YouTube real quick. So my channel, youtube.com/Chris Pulver. What do I have? 8,400. I'm at 8.5 thousand subscribers. Let's see if we can get up to 10,000 subscribers this year. A way that all you can help me do that would be when you're on these live sessions, engage in the chat just like you are. That's fantastic. And also clicking that stupid thumbs up button every single time you're in a session. If you ever watch one of my videos of the 715 videos I have on my YouTube channel, if you just hit the thumbs up button, that goes a long ways in just supporting the channel and the algorithm. You know, it's an impossible beast. Like I could care less about like trying to trend hack and tame and try to, just the most meme like Google Trends and do a video on it. It's like I don't care about YouTube that much. I love having the free outlet, and it's a creative outlet. That's what I use it for. If I can help traders and get you connected with my services and education, fantastic. That's what it's for. Okay. But the little things of like just engaging and leaving comments and pressing the thumbs up button, that's all I can ask for organic, natural growth. Because I've tried this, like when I first started this channel a few years ago, I tried the Google ads and I tried to, put money in it, and all I ended up doing was give me a bunch of likes, or I'm sorry, a bunch of looks, but no subscribers and no engagement, and my channel quality actually went down. And I probably had a bunch of bots come into my channel. So I'm trying to flush all that nonsense out and just have like real organic followers, and that would be you. So it does go a long way. I'll set a little goal this year just for fun. Let's see if we can get over 10,000 subscribers. I'd like that little milestone. It'd mean a little bit. And then from there, it's like 10 to 15, 10 to 20. Happens a little bit faster. So not bad. Sometimes I wake up and press the thumbs up button and go back to bed. That's all you need to do, right? If everybody was working like you, Papa John, man, I'd be at probably 20 to 30,000 followers by now. All right. Thanks, everybody. Have a good day. I'll see you tomorrow. Bye.